Hey guys, welcome back. Patrick here. In this week's review, we are going to look at Volta Charging. That is going to merge with SNPR. A lot of you have been requesting it. Now, when I'm looking at this industry, the one thing that I'm noticing is that it is going to become more and more commoditized. A commodity is something that everyone can do and doesn't have a lot of added value, right? So currently, we have a lot of different companies that are in the market, and there are 4 SPACs that are doing electric vehicle charging stations right now. They're starting to divide themselves between more needs-based charging, companies like EVgo, where you go for DC fast charging when you actually need it. And then you have more opportunity-based, more convenience-based charging station companies like Chargepoint and like this one, right? So one of the big problems when an industry becomes commoditized is that usually there's a race to the bottom. So one company is going to charge 30 cents per kilowatt, while the other company is going to start charging 25 cents per kilowatt. And there's this race to the bottom where it starts to become more and more difficult to make profits as the margins start to shrink. So when we're looking at these companies right now, it's going to be interesting to look and see how they're trying to separate themselves from this business model. And what I like about Volta Charging is that they understand this. They're trying something a little bit different. So I'm looking forward to explaining this and looking at it with you guys. Before getting to the review, if you enjoy content like this, please do me a favor and click the like and subscribe button. It really helps out. And also, if you haven't done so already, do check out SoFi's money account where you can get $50 if you deposit $500, and then their investment account where you can get $50 if you deposit $1,000. And right now they're going to be adding more and more features. The CEO has already confirmed it, so you'll be able to trade options and all of that other good stuff. So link in the description and in the comments. All right, guys, so in the intro, I talked about how this industry is going to become more and more commoditized in the future. The easiest way to describe this is when you go to the gas station to put gas in your car, you don't really care about the model of the gas pump. All you care about is it convenient for the location where you're going, and is the price good? Or at least that's how most people view like putting gas in their car. So this is what Volta Charging is understanding, is that in the future, as these charging stations become more and more common, right, it's going to become a commodity, and a lot of companies are going to fight on price. Well, who can't be beat on price? People that are charging zero, which is what Volta Charging is doing right now. They actually offer some free charging, at least for a certain period of time. But to make that economically viable, they still have to make profits. They're adding their own value proposition, which is they're combining their charging stations with a billboard. That way, all 3 parts of this transaction are benefiting. You have the consumer that's getting free charging for a while. That's value added. You have the actual store that's trying to attract visitors, right? And also advertisers that are getting to display ads that might be relevant for these consumers. So all 3 parties are getting some value out of this. So it is a fairly ingenious, clever way to like combine a commodity with adding value to it, right? So this is going to separate them from some of the other companies. Now, this is what it looks like, right? You have people that are going to be walking by and seeing different advertisement that might entice them. So this company here was trying to get people to discover their products. So people are walking by and they might actually like go and look for those products. Or another good example would be, let's say at a theater, like movie theater, you're going to see a movie, right? Well, if people see like advertisements about popcorn, well, they might be more likely to buy a little bit more popcorn. So the movie theater might make more money through that. So that's the type of advertisement that they're looking for now. And I kind of dread, let's say in 4 years, if there's the general election again, if they're allowed to have like political ads, like you're probably going to be littered with political ads, right? Volta Charging is probably going to make a lot of money off of that. So this is what the company is about, right? So you have a lot of different testimonials here of different companies that are seeing some success advertising with Volta Charging, or actually getting a little bit more customer engagement from it. And so this is what Volta is about, if we kind of sum it up. Now, the transaction itself, they are going to get about 600 million total from the transaction. This is from the 345 million that the SPAC has, plus 300 million in pipe, right? and the company is going to merge in the second quarter of 2021. So probably late May, early June, somewhere around that. So you still have a lot of time if you want to open a position. Now, they valued the company at $1.4 billion, but as I always say, this is at $10 share price, and now the share price has gone up, so we'll look at the value later. You'll keep in mind that the company is still very small, even compared to the other charging station companies. They only have 459 locations with 1,507 stations, and they do have contracts to double that almost with 471 locations and 1,112 more charging stations. So almost double and a little bit more than 2 charging stations per location. So currently they're located mostly in the big metro areas on the West Coast, Midwest, and Northeast, with some in Texas. And that's this company's strategy, is to land somewhere and slowly deploy them, right? And this is how they're doing it, is when they deploy in one location, they start with 2 level 2 charging stations, and then as the company progresses, they're going to be adding more to it. As the companies that have these charging stations are happy with the product, and over time, as there's more and more electric vehicles on the road, then they're going to be adding more, right? So they start with 2, and then they add 2 more with 2 DC fast charging stations. It wouldn't make sense to just start deploying like 20 per location where they're not going to have as high utilization, especially since you guys know that it's very expensive to add these charging stations. So they need to make sure that they're going to have high utilization rates. So by starting with 2 and then slowly building it out over the years, they're going to be able to maximize the utilization at each location. Kind of like at the Whole Foods, right? You have the DC fast chargers, you have the level 2. People come in, they spend a little bit more time in the store. They maybe look for some of the products that they saw in the advertisement. So everyone wins with this model. So that's why I do feel like it has a little bit of an advantage over the other ones. So here you kind of see how it works, right? So for the DC fast charging stations, you would get 15 free minutes of charging, and then after that, they would charge you 26 cents per kilowatt at that specific location. I think it's going to vary depending on the states. Each state has different regulations. Some charge by the minute, some charge by the kilowatt. And so in this case, like you're going in the store, you're not going to come out after 15 minutes necessarily, right? You can stay there for 30 minutes, but then you'll feel good that you got that 15 free minutes. The store is happy because maybe you spent a little bit more time there, you bought 1 or 2 more items, everyone wins. So in this case, right, the guy charged for an hour, he got 40 kilowatt, and that cost him in total $8.48. So the company is making money with the charging, the company is making money with the advertisement, and with the data that they're going to be collecting. Before I get into the revenues and valuation, I need to ask you guys something. What do you think about the fact that Volta doesn't control its own manufacturing? Personally, I don't think it's a huge problem because I feel like if they source it from China, remember, charging stations are a commodity. I think that there's going to be tons of companies that are going to be able to make these. So they'll be able to source them from China. They're going to order, let's say, 5,000 at a time, and they're going to get probably a better price than what Chargepoint can manufacture them at, right? So I'm not sure that's a big deal, but at the same time, on the flip side, you guys know that I like companies that produce their own stuff because that gives them more flexibility. In this case, what prevents Chargepoint from just adding a screen to their charging stations and then copying what Volta does? So that's why I think that in the end, it's not about the charging stations. No one really cares about them. The entire race here is about who's going to be controlling the best real estate, the prime locations. So the grocery stores, the big box stores, what's going to be eventually like the gas stations, more electric vehicle charging stations. Right? So who's going to control those prime spots? I think that's the real issue here in this race. So I think that Volta needs to really hurry while they're the only ones doing this before others start to copy them. But if we look at how this translates into real world economics, like the units, well, right now it would take them about 3.4 years to pay these back once they install them. So this compares to EVgo, which was taking about 3.5 years outside of California. And in California, they were paying them a little bit cheaper. And 46% internal rate of return is very good on these units. After 3.5 years, they're going to start making profits on all of these units, and they conclude that they're going to have about 10-year lifespan, right? So this is with the current economics. But now that's what I like about the company. Since they're going to be able to source them from China, and we can assume that over time they're going to be able to bring the cost down as they buy more of them. You guys know, like, the more you buy, the cheaper the cost. Well, they think that they can bring this down to a 2-year repayment period. What that would boost the revenues and the profits immensely on these charging stations. That would bring it to a 142% internal rate of return, which is frankly amazing, right? So instead of taking 3.5 years to start generating, like breaking even and then starting to generate profits, they would start in year 2, right? That would be amazing. So currently they have, well, they had 1,507. They think that at the end of this year, they're going to get to 3,142. And then they're going to like double every year for the next few years. Hopefully, at least that's their plan. And this seems to be fairly like in line with EVgo and the other companies that kind of double every year. Now, if we look at the breakdown for their actual revenues, 25 million in 2020, that's not a lot. I think we can all agree on this. And then 47 million this year projected. So they're going to start to generate a little bit more revenues in 2022 at 141 million. And hopefully, if everything goes according to plan, in 2025, they would be at 826 million. And here you can kind of see the breakdown is that they're going to make money from the charging, but that's only 56%. They're also going to make 37% from the actual advertisement and 7% from literally selling your data to other companies. So forecast for 2021, 47 million in revenues, 100% compound annual growth rate for the 5 years, and they think that they can get to EBITDA, not positive, but breaking even in 2022. So the thing is that for several years, they're going to have those capital expenditures. I'll show you, right? For a few years, they're going to have those big capital expenditures as they build the network. They pay up front, and then over time, they start to break even and then start making profits. So that's what it looks like. If we look at the revenues, 47 million up to 826. And 2022 is when they would be EBITDA, like they would lose 1 million. And then in 2023, they would finally start to generate a little bit of positive EBITDA. All right, so we're almost done. Now let's look at the valuation. And I'm getting a $2.44 billion valuation at the current share price of 1503. So that is 203.1 million shares times 1503 plus 52 million in debt. Subtracting 662 million in cash, and I'm getting 2.44. Now, how does that compare with the other companies? Well, we have EVgo, Chargepoint, Blink, EVBox, and Volta on my graph here. So if we look at just absolute values, of course, Chargepoint is much higher than the other ones because people bid it up to $40. Plus, also, the fact that they have so many more charging stations mean that the company is worth more. So in absolute values, like it's worth a little bit more than Blink, but a little less than EVBox. But this other graph is a little bit more representative of what we're trying to like figure out, which is it good value compared to the other companies? Here you can see that EVgo, I like their business model. They're going after more the needs-based charging. Like when you're on a long trip and you need to recharge quickly, you might go to EVgo. But at the same time, like look at their valuation compared to their current revenues. It's much higher than the other companies. Chargepoint here, since they have a lot of charging stations and they do have revenues already, is doing a lot better than EVgo in 2021. And then you have EVBox and Volta, which are fairly competitive, both of them, right? Neither of them is way overpriced with the 2021 revenues and where they're going in the next few years. So you guys know that I already liked EVBox. Volta's in the same category. I feel like they're going to do great, and currently they're still on a pretty good valuation. All right, guys, in the wrap up, what do I think about this company? How am I going to be playing it? And does it get my seal of approval? Well, you know that I think that this is a fairly weak, vulnerable industry because it's too easy to make these charging stations. There's already a lot of competition, and over time, I can imagine people importing boatloads of them from China. That's how the world works. People manufacture in other countries, and then they import in North America and Europe. You guys already know this, right? So it's not going to be about the charging stations. It's all about who's going to be controlling the real estate. And here, I think think that the first movers are going to have a massive advantage over the newcomers in the industry, right? So I think that Volta understands this. The fact that they're making it so you can park for free or charge for free for a couple minutes, then that's going to encourage you to go to that location. It's going to make it easier for them to get into a partnership with the stores, which the store wants more customers. And it's just a nice ecosystem for all of these partners. And that's why Volta is able to generate a lot of partnerships right now. Even though the company is still very small, they have some good customers and a very good pipeline. Companies like Albertsons, Walgreens, Stop and Shop, Whole Foods, that's for retail. You have the REITs, which control the malls. Then you have the car dealerships. You have the arenas. As I mentioned before, you're going to have the movie theaters, right? All of those prime locations for real estate where you're going to be able to put your charging stations. Whichever charging station company controls those, that's where I want to put my money. And the fact that Volta is having one of the first mover advantage, I feel makes the company very attractive. Like they understand the game and they're positioning themselves differently from other companies. So for that reason, I'm going to give them my seal of approval. It is very much a spec play. You have to understand this. We really don't know how it's going to play out over the next 5-10 years. As I mentioned, I think this is a fairly vulnerable industry. But as a small bet, I'm willing to go with Volta. I think that they have it figured out. If we look at the share price, it's a company that had a lot of momentum from the beginning because people liked the management team, right? SNPR, the company that brought us highly on in the beginning. And so because of that, it was already fairly high. But then it jumped to 1833 when they announced the merger, right? So the company has some momentum. People are very interested, but as usual, you have to understand this. After the first initial spike in price, there's that retracement period. So personally, I'm interested in actually opening a small position in this company. The warrants are kind of expensive right now at 510 compared to 1503. So this is a leverage ratio of 295, which is much lower than we usually see. Usually it's often like 3.5. 3.75 before there's that nice surge in price. So because of that, personally, I would most likely go with shares right now. Remember, that's just how I'm doing it. I'm not your financial advisor. And what I'm going to do is I'm going to wait and see how low it goes when it stabilizes. And then I'm going to open a small position, probably a couple hundred shares. I don't want to go too big with that company because I really don't know how it's going to do. At the same time, short-term play, we all know that the electric vehicle charging station companies so far have done really well. If we look at the prices, as I mentioned before, look, valuation for EVgo 4.69, 11.10 billion for Chargepoint, and so all of them have done very well so far. Nothing tells us that it's going to be different for Volta. I mean, I can see this company going to 20 again right before the merger. So that's how I'm going to be playing it. I'm probably going to open a small position with shares. And yeah, so let me know in the comments what you guys think. Are you interested in this company? Do you feel like the fact that they're not controlling their own manufacturing is a problem or not? Let me know what you guys think. I'll see you in the next video.